Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, September 20th, 2010. Well, folks, the markets are substantially higher today, just as we're seeing Obama coming off a little bit of a speech at his town hall meeting. The markets are higher, Dow up 111 points or 1%, Nasdaq up 26, 1.1%, and the S&P 500 up about 12 points or 1.1% as well. Now you can see on Friday we had a beautiful consolidation pattern developing with a little bit of a triangular distance here. The lower levels connected down here, the higher levels connected up here. The market essentially was just gyrating up and down in a tight range looking for direction. Today the direction was given. We talked about this last week to our premium members, how really going into this Monday, Tuesday period, you weren't looking for a move down in the markets. It would be very, very tough for the markets to fall, namely because you had Obama at the town hall meeting today. Very rare you'll ever see a fall into something like that. In addition, the market is looking forward to the Federal Reserve meeting tomorrow, the results of which will be released at 2:15 p.m. Eastern Time. So sure enough, the markets, after a decent weekend of calm out there, rallied higher, sharply higher initially on the back of a fall in the dollar, which again, the dollar as it falls continues to prop the markets up. We know the inverse relationship that the dollar has with the markets. And sure enough, after that initial move up on the first hour, hour and a half of trading, the markets topped out, pulled back, a little bit of a double top here, and you can see you're just hovering in an upper range now between the 114 level and really the 113.50 level. All right, 113.50 being this line, and the 114 just upwards of here, just a little bit higher, 113.90 area as a high. Now, again, the key thing for today is to remember that you had the Obama speech today given at the town hall meeting where, again, he was asked questions about the economy. He talked about tax cuts, talked about cutting and spending, and all the kind of pertinent things that are going to be key political issues coming up for the economy as well as Wall Street. Now, again, one thing to note here is that the volume has remained unbelievably light today. In fact, there the market is breaking up. Watch for a level at 114. 114 even number is a major level. It can be scalped on the short side at a pierce of that level, which again we may go to right here. I'll keep you guys posted, and I'll be doing the scalp live as well should we get to that point of interest here in the next couple minutes of this video. Couple other things to go over. Number one is before we get into the technical side of the charts here on the SPY, one thing I want to just mention to you guys, we just had another nice winner in the Research Center Hot Charts and Alerts. I gave this call out last Wednesday. What I'll do is I'll show you on the 60-minute chart as it's the easiest to kind of view on there. And if we do go to LOCM, local.com, I put this out on the Research Center as of last Wednesday at a price of $3.40. No sooner had I put that chart out as a hot chart and alert with a high side buy signal over to the upside based on a lot of shorts being in the position and the market's continuing to rally, looking for a little bit of a squeeze higher. The stock took off that same day right here on the 15th of September to the upside, going to 374. At that level, I gave the alert to sell half the position and look for consolidation, at which point you'd look for the second half to rise higher and take out the $104 level. Sure enough, it happened just as I called for. A market moving up, made 10% on the first half, consolidated down, and then look at this rip today, folks. What a move up on LOCM, going to 406. That's a 20% gain on the second half. We had a 10% gain on the first half, and this was another alert in the hot charts and alerts last week. The markets have been quiet, but there is still money to be made, and you want to join that research center immediately. All right, get involved. There'll be more plays coming out, more 10%, more 20%, more 30% winners. Market swing trades, you got it. This was a swing trade as well for all of you that aren't day traders, maybe just swing traders. This one was a good one. And again, more to come as this market continues to trade higher on the day. Now let's go back to the SPY and just discuss a few odds and ends. Number one, we'll go back to the intraday, and clearly you can see how the gap up today took us above the blue slanted trend line. See the triangular pattern down here from Friday as you were consolidating off of that initial gap up and then really sell off here? What was so interesting about today is you sold off on the first two candles, but you came down and retested this blue line. Notice how you retested it, and then once you touched it, that was the signal to go long. And again, note this, the gap up here, small red candle, small red candle. Let me zoom in a little bit more for you guys. Small red candle, small red candle. It comes down, pierces this blue line, which also coincides with the 50 and the 200 moving average. And by the way, folks, I called that out in the intraday stock chat as a long play. Look at the results of that move. All right, again, this was a long scalp play. Why? Because not only did you have the blue line of support, but you had two key moving averages on the intraday 10-minute, and sure enough, look at the results to the upside. This thing just took off like a bandit here to the upside, rallying all the way basically to 114, which is currently where we're sitting, or just under. We have a little bit of this double top that's getting pierced up here. Now, as you rallied up, you stalled out at 113.50. little bit of a consolidation, and then you took off higher as Obama began to speak. And as he spoke, here you had a small pullback, and then once he was off, the markets kind of gingerly floated higher, and that's what we're seeing here. Notice how you haven't been able to come back below the 20 moving average. 20 moving average is working like a floor on this market, at least at this point in time, and you can see you hit it here and floated up, punctured it here again. All these candles kind of hitting it, but never breaking and never closing below. And sure enough, after trying so many times, the market has floated up here a little bit. 114 is still a key level, though. I have to recommend that as a good level to watch. A very good possibility that you will see a little bit of resistance there. And if you get through 114, then you'll be looking at the 114, 40 to 50 level as your next spot. But right now, the 114 level will be key in the charts, and we'll continue to analyze it in the intraday stock chat, giving calls out. And again, some good calls today early on before this market kind of got very quiet as the volume died out. We've only done 117.5 million on the SPY, probably on target here for about 165 million, 170 million, which again is very, very light for this point in September. Early in September, you expect light volume around the holidays. Towards the end of the month, you should be getting a little bit more volume, but we're not having that. Now, why aren't you having more volume today, for instance, or maybe even early tomorrow? The answer is, again, Obama's speech today, and everyone looking forward to the Federal Reserve meeting tomorrow. These are all keys that are going to keep the volume light until we get the word out from the Fed. Starting tomorrow afternoon, after at 2:15 p.m., after that time frame, expect more volume to come in and the markets to either rip up or rip down. Right now, you have to think that the markets are slightly overbought. And again, I'd probably be looking a little bit for a pullback, at least by the end of tomorrow, if not on Wednesday, in this market, assuming this market stays up here until then, which it should do. All right, and again, we talked about this on the weekend video. I talked about it late last week. Very unlikely you'd see any sort of selling ahead of Obama and the Federal Reserve, and it looks to be exactly like that. And again, what's nice about that, folks, is it allows us to make more plays. There's plenty of small caps, mid caps, large caps that are still in prime locations to be made money. All right, they're going to be making you money. You want to be utilizing that, just like LOCM, which again, 20% profit on the second half, 10% on the first half, and that's in a matter of 3 to 4 trading days from last Wednesday. So you had Thursday, Friday, and then Monday today, 20% on the second half, 10% on the first half. Can't be beat. All right, now a couple other things to go over here. Let's talk about some key trades. There are some big stocks moving today. Google up $19.50. This stock is now up basically $30 to $35 in the last 2 days. Please note on this chart how you had to move up. Sideways consolidation, that's bullish consolidation. If you don't know your bullish and bear flag type scenarios, you have to join the research center. We cover it. We educate you. We're going to give you plays. We're going to give you key analysis of the market to be able to position yourself on gold, oil, the markets, on stocks. All of it's included in that research center on all these different pages that are inclusive of that research center, $49.99 a month. But one thing you can easily say, take a look at this chart. I mean, it's a no-brainer here. You rallied sharply higher here, and then look at the last 4 days last week on Google. Sideways consolidation into the spark plug of the 50 moving average, and look at the blast off. Not only that, but look at this. This is actually pretty interesting. You're now piercing a double top. This actually will be resistance here, and this will be a level to watch at around the 509, 510 level, and actually probably a little bit of a good area of resistance here for possibly accumulation of a half position on the short side of Google for a short-term pullback. If you go up past this level, you're going right to the 200 right here, which would be about 525 right now. All right, so that's Google's chart, and I'll take a look at Apple as well. Apple piercing the double top right up here. You can see some previous lines of resistance. Notice how it pulled back right there. You have the red line. That was a minor pullback level, and then it burst through. And now Apple, again, is trading up through this double top as well. There's a lot of big tech names that are at double top levels we have to be watching. All right, and again, that tells us overall that, again, when you have master stocks at master levels, you want to be a little careful. Granted, do I think the market's going to fall before maybe tomorrow afternoon? And even if it does fall, is it going to be a big fall? Big fall is up in the air. I don't necessarily think it is, but you do expect a small pullback, probably Fed-related afterwards, maybe Wednesday, Thursday, if it doesn't start Tuesday afternoon, late after the Fed. All right, guys, so that's what we're seeing there on a couple key stocks. Take a look at Goldman. Goldman up $1.17 today. I talked about the dollar earlier today. The dollar is down on the day, although, again, kind of in a consolidation mode, although this is a bearish consolidation mode right now as well, which is bullish for the markets. As strange as that sounds, it is bullish. Dollar going down means the market most likely going up. Bear flag consolidation, if this starts to break down, it probably will give some fuel to the fire to the markets, which again makes sense today and tomorrow, obviously, before that Fed as well. All right, other than that, just continue to watch these charts. The charts will tell you everything. So will the research center. You want to be in that research center. You want to be getting all the information live. I've sent out 2 alerts already, which go to your cell phone or to your email, whichever you choose. And again, they're alerts to either buy, sell, or a key alert based on a new chart that looks like it's coming into a key level that you want to be ready for. And again, that's the hot charts and alerts. It's just one of the many things that's in the research center. Join now, folks. We'll see you soon. And for those of you that are members, I'll talk to you tonight in the nightly 30 to 40 minute video that I do every night. Take care.